Okay, we're going to go through the background and evolution of market profile, and I can't overemphasize this strongly enough. We are not market profile traders. We are auction market traders. You do not want to be a market profile traders. There are a bunch of market profile traders. There are no profitable market profile traders. Now, the market profile graph is a tool. We use it as a means to an end, but we're using it to give us information about the auction market. We're not using it as an end in itself. It cannot be effectively used that way. And most of the time, you really need to use the bar chart with the profile chart. There are times where you get a better view of the auction process on a bar chart. There are times where you get a more obvious view of what the market is doing on a profile chart. Over time, you'll be able to look at a bar chart and you'll know what a profile chart looks like, that the corresponding profile chart looks like. It's very difficult to look at a profile chart and know what the bar chart looks like. And if that confuses you, just hold that thought. We're going to spend a lot of time talking about those two topics because it's very, very important to learn how to use and how to read both of those charts through this auction market lens that we're going to teach you. Okay, now the background and evolution of market profile, it can be traced back to Chicago in the early 1980s, and there are three primary individuals that have popularized market profile: Peter Settlemyer, Jim Dalton, and Don Jones. And by far, Peter Settlemyer and Jim Dalton are the best known. I'm going to talk about, I really can't talk about one without talking about all three of them. And this, you're going to learn something tonight that very, very few people are aware of about the evolution of market profile. Now, let me explain, take you through my history with market profile. I began trading in 1985, and I have more stories than you want to hear about trading and my experience trading, but suffice to say, I was very enthusiastic. I was a stockbroker. I became a stockbroker in 1985 and hated it. Just absolutely hated it. But man, I loved the markets. And I can remember cold calling. I did the cold calling thing. And I can remember a specific phone call. And, even this was the mid-'80s. And, cold calling was not popular even then. But I'd call somebody up and, interrupt their dinner and, and stuff like that. And one time, this guy answers the phone, and I said, Mr. So-and-so, I have an investment idea. Would you like to hear it? He says, sure. I said, oh, wow, I've got one here. So I start telling this guy about something. Let's call it IBM. I don't remember what it was. And, he listened. I went through my entire spiel on buying IBM and why, what it was going to do. And it's trading at 87 now, and we've got a target of 120. And it's a great time to get on board. Can I put you down for 1,000 shares? You close the guy. And the guy at the other end of the line, he doesn't say anything. He says, why don't you buy it? I said, what? He says, well, it's at 87. It's going to go to 120. Why don't you buy it? I didn't have a good answer for that. Besides the fact that I didn't have any money. But it made me think. And I thought to myself, well, yeah, hell yeah, why don't I buy it? If it's going from 87 to 129, sign me up. I'm going to buy it. So I started thinking, hey, maybe that's where the real money is made. So, the selling stuff to people wasn't as much fun, especially if, I'm someone I really have to, I can sell you anything, but I have to believe in it. So I started thinking, well, gee, if this stuff is going to go up, let me figure out how to buy. Well, I didn't have a lot of capital. So I started trading options. And back in the, when I started trading, the OEX was an index option. It's the S&P 100. It still trades today, but the OEX was the S&P mini of the day. Futures had come out in 1982, and I didn't start trading the S&P until about 88. So in 85, I started trading the OEX options, and I ended up trading very quickly. I was trading hundreds and hundreds of OEX options for my own account every day. I had a computer sitting on my desk with one of the first iterations of an option analytic software that gave me the Greeks, and I got all into the options thing. This was the program was OptionView. It's still out there today, and I would download by hand the option chain into my program so that I could, get the different Greeks and the deltas and this, that, and the other. But I was basically just, gambling. I was buying bunches and bunches of out-of-the-money calls, and primarily out-of-the-money calls. I was always long, and out-of-the-money puts. Well, what happened is that as soon as I started trading, I decided, well, if I have, a $5,000 account, I don't want to buy these options that cost $3. I can't buy very many of them. I want to buy these options. And this was when you could buy options for a 16th. We call them a teeny. You could buy options for $6. So instead of buying an at-the-money option and paying, $1.50, $1.75 or whatever it was back then, I'd buy 600 out-of-the-money OEX calls for, $6 or something like that. Well, I did this, and unfortunately, the market took off, and I took a small sum of money, and in about 6 or 7 weeks, I had run a small sum of money into more money than I had ever made in my life in any 2 years combined up to that point in time. Well, I immediately attributed my success to my specialness and how smart I was and what a great trader I was. And I was on my way. I had taken this money up into the, I think I'd run $5,000 to $60,000 or $70,000. And, I had, and then of course in my mind, I'm extrapolating that rate of return out, and I'm thinking, okay, in 4 years, I'm going to buy Harbor Island over here in Tampa. I lived in Tampa at the time. Well, the rest of the story is that came to a screeching halt, and I gave all that money back and more. But and then I've got stories about trading the market crash too. I was actually short the market in 1987 when it crashed and lost money. That's another story. I'll save that one for you. But anyway, so I eventually figured out that I didn't have a clue what I was doing, and I had better figure it out. And so I've always been one of these people that gets, if I get involved in something, I get completely immersed in it. I don't care what it is, whether it's, when I played baseball or fishing or hunting or tennis, anything that I get involved in, I just leave no stone unturned. And I was that way with trading. So I called all the gurus and subscribed to, the relatively few newsletters that were out available at the time, nothing like it is today. But back in 1988, I started using CQG as a trading platform. And I was looking through CQG one day, and there was this thing called Market Profile. So I click on the button for the Market Profile indicator or whatever it was, and it, prompt came up that says you'll have to contact your representative, to get this. It costs money to, it was an add-on. So I called my rep and I said, Becky, what is Market Profile? And Becky says, well, it's a charting thing. And that's, literally, it's a charting thing. I said, okay. Well, she says, you want to try it? Because, you can try these things for a couple of weeks. I said, sure. She says, okay, I'll enable you for it. And it'll, in 30 minutes, you can pull it up. So she enables me. I hit the Market Profile button, and my bar chart turns into these letters. Now, what in the world is that? So I call her back, and I said, Becky, what is this? She says, well, that's market profile. I said, yeah, but what is it? I said, it's a bunch of letters, and it's these, shapes and stuff. And she says, well, hold on a minute. And so she comes back and she says, well, there's nobody here that can tell you what it is. I said, well, where did this come from? She says, well, it was, there's a guy named Peter Settlemeyer that's friends with, and I forget the guy's name that owns CQG, that's friends with so-and-so, and it's his, invention. He's the one that did it. I said, well, you have a phone number for him? She says, hold on. So she comes back, she gives me Stellemeyer's number, because I would call anybody. So I picked up the phone and I called Stellemeyer. And now I'd been trading about 3 years and thought I knew what I was doing, or thought I was beginning to know what I was doing. So I called Stellemeyer up and I start talking about market profile, or ask him what it is. And he starts talking with me about market profile. Now, I don't know how many of you have ever heard a lecture by Peter Stellemeyer, but it's unique. And let me say this, I have incredible, enormous respect and admiration for Peter Stellemeyer and for the work that he has put out into the public domain in beginning this process of how to view markets. He was the beginner, the originator of it. But he has one of the more abstruse means of communicating of anyone I've ever tried to listen to. And I'm not the only one that says that. He's acknowledged it. The guy is, he just has an odd way of communicating, and it can be difficult to understand the concepts that he's trying to convey. So anyway, I talked to Stellemeyer. He was very generous with his time, and we talked for 30 or 40 minutes, and he'd answer all my questions, and he would expound on this, and he would talk about that, and I'd hang up the phone, and I'd look at the receiver, and I'd just go, what? I had no idea what he was talking about. And so that was my first initiation into market profile, as I began to look at it and just sort of visualize and work with it and look at it. Well, Stellemeyer was a floor trader in Chicago in the grain pits, and he had a background in farming, and I won't go through that entire story tonight. Some of you guys have heard it before, but he grew up on a farm, and a farm is basically one giant auction. And so he was familiar with auctions and bargaining and dealing and value and things like that. And then he ends up in the grain pits in Chicago. And, he's a visionary. He has a different way of looking at things. He's just one of these people that's cursed or blessed, as the case may be, of seeing things from a different perspective. And he was able to visualize on the floor this process of price activity during the day and what prices tended to do and why, and what would change, what would create prices to change from the area in which they were trading then and go somewhere else. And that's the genesis of how he organized this profile graph, and we'll talk more about that. And he went to the CBOT. He was a member of the CBOT and basically gave the CBOT this work, which was extraordinary because nobody would ever give anything away like that in this day and age. So, Stellemeyer should get more respect than I think he gets for what he has given to the trading community in terms of starting the process of looking at markets differently than they'd ever been looked at before. Now understand, and this is a very, very, very important point. This is a key point about market profile. Market profile was designed to give off-floor traders information about trade activity, i.e. volume, that was unavailable to the off-floor trader at that juncture. Market profile came to be at the time when the floor, the trading pits, ruled the trading world. To trade, you had to go through that floor. It was the source of information. Everything went through the floor. Remember that. Everything at the point in time market profile came to be was initially posited as a concept, went through the floor. We'll revisit that concept, but I want to put it out there. I want you to remember it. Now, so Stellemeyer creates this incredible buzz because he's sort of a charismatic guy. He has a lot of credibility. He's a very bright guy, and plus he was one of them. You know, he was a floor guy, so he had instant credibility in Chicago. Well, Market Profile became sort of a cult, and you know, the floor traders obviously were all over it because the initial premise is that you could take Market Profile and you could use it to predict what the markets were going to do. You know, there's still this incredible attempt to predict what markets are going to do. Now we know, and I'll tell you now, auction market traders do not predict. I don't predict markets. You're not going to predict markets, but we can identify trade location. We're traders looking for high expectancy levels to trade, and we'll revisit that. But anyway, the initial promise of Market Profile was as a predictive device, and also Market Profile was designed as a discrete day-to-day entity. In other words, you had the profile for today, then you had the profile for tomorrow, and then you had the profile the next day. They really weren't looked at explicitly in a combination. Now, if you read between the lines Stellameyer's work, early work, he was visualizing a bigger auction process. But again, he did not articulate it particularly effectively. Now, Stellemeyer had an office at the Board of Trade. Jim Dalton had an office at the Board of Trade. At the same time, Stellemeyer had an office at the Board of Trade. Jim Dalton was a commodity broker. He had a commodity brokerage firm. And he saw the benefit of the buzz around Market Profile and jumped on board the bandwagon and started promoting Stellemeyer and Stellemeyer's seminars. He gave a series of seminars and workshops at his ranch out in California, and Dalton jumped on board because it was good business. I mean, he was a broker, and you know, this was something value added to his clients. So Dalton, and I have a book around here somewhere, one of Stellemeyer's books, was sponsored by James Dalton and Associates Commodity Brokers, 141 West Jackson. Okay, now the third party here is Don Jones. Don Jones was a trader too. Don Jones traded, I don't know, 10 or 15 years. He ran a hedge fund. And Don had a 50% return average for something like 12 years. And then the system that he was trading, and Don was a systems trader. Don is a physicist. Don is literally a rocket scientist. I forget the company he worked for. He worked for Lockheed or one of those companies out of college, but Don's a physicist. He's a scientist. Well, he's, you know, at this point, he's winding down his trading business, and he hears the buzz about Stellemeyer's work. And Don's a scientist. I mean, has that critical thinking mind. He's the premise of Market Profile and the general concept, and this is why so many engineers and science types are attracted to it. They look at it and say this Gaussian shape. They think, oh, statistics, it has validity. Well, that's the same thing with Don Jones. He sees the statistical shape of the shape of a typical statistical distribution and says, let's look at this. And so there's this big buzz about Market Profile. Well, you didn't have charting programs then that would chart Market Profile for you. You had to have data, and you had to get that data somewhere, and the CBOT was the only place you could get it. But then you had to have it compiled into this profile format. Well, Don Jones starts a business, a data business, downloading the CBOT data every night and compiling it into the profiles that Stellemeyer is telling people they need to use to predict prices and trade from. So Don Jones has this big business going, supplying the students of Stellemeyer, and Dalton is a broker, and he's seeing all this going on. And then Dalton, and I don't know exactly where in here, but Dalton sort of breaks off and hops on board the Market Profile wagon and decides that he's going to become and brand himself as a Market Profile guy. And to do that, he writes Mind Over Markets. And Mind Over Markets, most of you have read Mind Over Markets. Mind Over Markets is still, to this day, the Bible of Market Profile traders. Now, it has zip validity, but it's still the Bible of Market Profile traders, which is fine. And Mind Over Markets is basically a rewrite of the CBOT manual, and Dalton added some day types in it. And Dalton became hugely popular because his writing was easier to read and it was easier to discern the points he was trying to make than Stettlemeyer's rather abstruse stuff that he was putting out there. So people were flocking now to Dalton and to his seminars and his work. Well, Dalton became extraordinarily popular, and he's writing Mind Over Markets, and he's got these ideas about how to trade the market profile graph. And he needs these ideas tested. Well, Dalton's not a computer guy. Don Jones is a computer guy. Don Jones is in the same building. He goes to Don Jones. They're buddies. You know, all three of these guys know each other. And says, hey, can you test this? And Don says, sure, if you can define it, I can test it. And so Dalton starts giving Don Jones these ideas about, okay, now what happens if the market opens above the previous day's value area and trades 3 ticks into the value area? What's the probability of a complete retracement of that day's range? And, you know, basically the setups that you see and you read in Mind Over Markets. So Dalton goes to Don to test all these setups. Well, bottom line is he goes to Don, tests his setup, doesn't work. Tests his setup, doesn't work. Well, he gets frustrated with Don. And Don says, look, you know, the computer can only test what you tell it to test. And it's not a discretionary model. It's binary. It's yes, no. It either has a rule or it doesn't have a rule. The computer doesn't understand nuance and discretionary trading. So long story short, Don could not validate through his testing the stuff that Don Jones puts in Mind Over Markets and, you know, thought had validity. Well, it was very popular nevertheless, so Dalton starts a fund. And something else, another aside here, if you look at Mind Over Markets, the authors are Dalton, Jones, Dalton. Well, the Jones is Don Jones' son, who was the editor of Mind Over Markets. So that's another piece of the puzzle here. So Dalton goes ahead, prints Mind Over Markets, becomes extraordinarily popular, still is to this day, and people still try to trade the stuff that's in it. Dalton started a fund because people were throwing money at him because it sounded so good. And basically, they shut the fund down in 6 months because it lost money because the trade didn't work. Now, how do I know all this stuff? I know all this stuff because I've spent a lot of time with Peter Stettlemeyer, but I've spent even more time with Don Jones. I consider Don Jones to be a really good friend and the closest thing to a mentor that I've had. I have spent, I don't know how many hours over the years with over on the phone with Don, and I've gone out there and stayed with Don, and he's just a delightful human being, just one of the neat people that I've had the pleasure to know in my life. Don is probably, gosh, I don't know, his mid-80s, and still, I mean, he is the real deal intellectually. He is one of the bright people. You know, there's the world, you know, we live in a world where all of us are around really smart people, but once in a while you run into somebody that's really, really smart. Don Jones is really, really smart. And I don't mean in just a geeky way. I mean, he's plenty geeky smart, but he's one of these guys, you know, I'll go to dinner with him and, you know, we'll order wine, and then he'll start telling me everything there is to know about that wine and the region it's grown and that type of grape. I mean, you know, he could tell you about the tablecloth. I mean, he's just one of these people. It's just, but he's neat. He's just a lot of fun. Anyway, so Don then begins looking at Stettlemeyer's work more closely, and he begins looking at Dalton's work closely. And being a scientist, he's going to test things. He's going to prove or disprove things. That's his mindset. It's scientific method. And basically what Don Jones found was that the way market profile was being presented had zero validity. It didn't work. It just, you know, it didn't work. Now, I'm going to read you a quote from Don's book. Let me find it here. Okay, here it is. This is from Don's book, Value-Based Power Trading. Stettlemeyer and a partner started Market Logic School. A system of market analysis based on profiles was taught by Market Logic School and separately by Dalton Capital Management. Hundreds of traders were drawn to these courses by the promise of learning how futures markets could be understood and mastered. The Dalton Group initiated a biweekly research report under the editorship of Eric T. Jones. That's Don's son. These profile reports investigated all aspects of the market profile liquidity data bank, and we're going to touch on that in a minute, providing unparalleled breadth and depth of information on this database. Students of Market Logic School and the Dolphin Group demonstrated a willingness to do the necessary homework and study to understand profile theory. Many students continue to have difficulty in applying it to the market. Our company, Cisco, that's Don Jones' company, it's cisco.com. I'll send you the website. Our company, Cisco, had the impetus to encourage and help traders because we were a source of the CBOT data. We interviewed many traders who stopped buying our data because they could not make profile theory work satisfactorily. They reported two main problems. Within the day, they were unable to project the day's action from the developing profile to its final form, and they were unsuccessful predicting the next day's action from the previous day's profiles. What I just read to you is very profound and it's very important, and it's why you are not going to be a market profile trader. At least you're not going to be a successful one. It doesn't work, and that's what's being taught out there. That is market profile. The very thing I just read to you that Don Jones tested 25 years ago and proved didn't work is still being taught, and they're trying to trade it. Now, what Don Jones did discover, and this is where you get to the good part and the exciting part about where we're going to go in this course. At Cisco, we felt that a database with 10 or 20 times the information in the daily summary had to be useful for market analysis. We also believed in the utility of the market profile approach. Consequently, we developed an algorithm to calculate day types. Profile theory argued for the significance of day types in predicting continuation. We felt that once we could generate day types under computer control, we could develop enough information to find statistically the conditions under which the day types could predict continuation. Our study was negative. Surprisingly, we found little or no correlation between day type and continuation. This point was the watershed in our research. It forced us to look outside market profile theory in our attempts to understand markets of longer time frame. It has long been known in futures research that markets have no day-to-day serial correlation. That is to say, even in trending markets, the probability that the next day will be either up or down is about 50-50. On a day basis, the market's normal fluctuation, the daily trading range, is much larger than any underlying trend and hence hides it. Now this is the key sentence. Thus, it is clear that longer-term time frames are necessary to define the market's condition. You guys hear me say, we trade market condition. We are not price-based traders. We are trading market condition. You want to be a market condition trader. And the specific question about market condition, or the answer, the question and the answer is, this is an auction market. What is the condition of the auction at this point in time? What is the market's condition? You can't look on a 3-minute chart in a discrete manner and know what's going on or really have an edge in trading it. There has to be something that gives it context, and that has to be something that has validity to it. That context has to have validity. So now you have more idea about the history of market profile, and it's important. It really is important. The name of this course is the first word is foundation. It's important to understand the foundation of what you are learning and why and where it came from, and it will keep you out of the briar patch out there of all this nonsense that's going on and all this magic that is being foisted on the public because market profile is becoming more and more popular as a term. So you are going to know where this stuff came from and why and what's valid and what's not. It's really, really important. And let me say something else, and a lot of you heard me, and I'm going to show you some quotes from Stottlemyre too. Stottlemyre doesn't trade market profile. Stottlemyre hasn't traded market profile in 17 or 18 years, by the way. Now, Stottlemyre still does seminars and webinars under the market profile imprimatur, but it's sometimes I almost think that Stottlemyre wishes market profile were not around his neck, because market profile itself does not define it by any stretch of the imagination what he is doing now or what he has been doing or researching for the past 17 or 18 years. And I'll just leave it at that.